I think it takes quite an open mind to pick up on this technology, especially when it was much less well known. Today, it's a household name. You see it on TV all the time. But there was a time when nobody was talking about this other than geeks, and it wasn't much before when you got involved.
Right.
And if you in fact got involved in the middle of 2012, that's the same time I found out about it and started getting involved.
Okay, you read the white paper on it and were just fascinated by the elegance of the technology, right?
That's correct, yeah. It just blew my mind.
And the price of Bitcoin then was roughly?
$2.
$2.
Yeah.
Okay.
And so I got interested and I started playing with the technology and reading about it and looking at the code and trying to understand it and finding that I couldn't understand it, and that made me even more intrigued. And yeah, I mean, that story, that path is one that a lot of people have. First of all, there's an element of skepticism at first, which is absolutely healthy, and there should be, right, in all of these things. In fact, if anything, there's not enough healthy skepticism in this industry. And then people start doing their own research, trying to make a list of reasons why this isn't a good idea. In fact, I had someone who started writing a book. They were telling me they started writing a book about why Bitcoin is a Ponzi scheme. And they started doing the research for that book and then abandoned it 3/4 in because they disproved all of their points. Okay. And they couldn't. They kept finding evidence that all of the things they thought were actually misunderstandings, and turns out it wasn't, and then they got really into it. Pretty much everybody who gets involved in this technology starts with a very skeptical perspective, and then perhaps ignores it the first once, twice, 3 times they hear about it, and then eventually dips a toe, gets completely fascinated by it, and then dives right in. And I meet people who are on the other end of that journey, and I quit my job. I was working for a bank. I was working for, a corporation. I had a secure job with a pension, and I quit it all. I work for a startup, or I'm self-employed, or I'm doing consulting or something like that. So not just dive into the technology, but change the trajectory of a career, starting a computer science degree for someone who was never into programming, and they want to learn how to code because of their fascination with cryptocurrency.
It changes people's lives.
Yeah, absolutely.
Is it cultish? Like people get into it and they want to dedicate their life to it. I mean,
there's
you said
of
you
that.
didn't sleep and eat for days when you first read about it, right?
But I have that response to technology. It wasn't this specific technology. I had that response previously to other technologies that fascinated me, like the early internet, the first web browser, the first open source operating system. My first computer when I was 10, that happened to me. There are many reasons why people may get obsessed, right? Some people are driven by technology, they get obsessed by that. Some people are obsessed by some of the political and ideological implications of breaking down borders and connecting the world and freeing people from control of governments and corporations, of privacy. Some are excited by the investment, speculation, and the possibility of getting rich, right? Which is a terrible idea. But that attracts a lot of people, right? So I would say the majority of people, the first time they get involved in crypto, it's probably because they heard that it's some kind of investment opportunity. Someone tried to sell it to them in some unscrupulous way, or they got pulled into a Ponzi scheme, or one of the other cryptocurrencies that are more or less pump and dump scams. And then they discover that's a pump and dump scam, and they're like, find others that are not, right? No matter what the motivations. I think in the end, the people who stay after the price does one of those find another reason to be interested. So they might come in because of speculation and mania, and then the ones who were only motivated by that, they leave. And the ones who stick around a year into the crash have found other motivations. They like the community, they understand the technology a bit better, they're driven by the political implications. And I tried to cultivate the understanding of the technology. So like, okay, welcome. You came because you want to get rich. That's okay. You're welcome. Now let me tell you about why you should stay because of the technology, even after the price crashes.
How do you feel when it's the big speculation moment, because like Bitcoin is almost like not your baby, but it's something that you've had a relationship for a long time. And then in 2017, we saw that it was just this massive speculative play. People are jumping in and all that stuff. Does that bother you when people are coming in for that reason? Or how do you feel emotionally when you see people make a lot of money, lose a lot of money? You got these people in Puerto Rico that went down and like took over San Juan and started throwing money around, and the ICO billionaires, and like, what do you see? How do you feel when you see that stuff? And what do you see?
I mean, it bothers me to a certain extent. First of all, 2017 was the 7th or 8th bubble. And it wasn't even the largest one, because, you know, when you look at these assets or currencies, you got to think of percentages, right? So when something goes from $1 to $30, it doesn't feel like a huge rise, but it's actually a 3,000% rise, which is bigger, which it did in 2012, which was a bigger rise than the recent one. It's just the numbers are bigger now. But as a percentage, actually, the spreads have been getting smaller. And every time this happens, it attracts the wrong crowd. It attracts scammers, opportunists, pump and dumpers, pyramid schemers. And the ICO market enabled a lot of those people to make their own coin. One of the things that people don't realize, the reason this all happened in the ICO market is because a new blockchain, a new open public blockchain called Ethereum, made it so that you could build a scalable, secure, transferable, censorship-resistant, open, borderless blockchain on top by writing 20 lines of code.
Okay. So the Ethereum allowed other people to piggyback on that framework to launch their ICOs.
It's a programmable blockchain. So what do people use a programmable blockchain to do? I have many ideas, all of which are interesting and fascinating projects, mostly around censorship and privacy. But that's not what people chose to do. They chose to build these platforms to do massive pump and dumps and to launch all of these startups, which is interesting in the long run, because if you can fund startups with an international pool of investors and actually bring startup-like investors to people around the world who don't have access to those investments, that can change the investment field. But that's not what happened. 99% of them were just outright scams.
And maybe we should do some backup and do a few definitions for people that aren't completely up the curve. So the original cryptocurrency was really Bitcoin. It's been around since 2010?
2009. January 3rd, 2009 was the launch.
It was pretty much the only crypto that you would have been trading up until 2014 or 15, really?
No, there were
a few others, right?
The altcoins started, as they're called, altcoins or alternative coins, started in 2011, I believe, was the first one. And they were mostly kind of clones of Bitcoin. Then by 2014, we had another round of altcoin growth, and then Ethereum was launched. And Ethereum made it simple to like put building blocks together programmatically and build all kinds of different features, including ICOs, which stands for Initial Coin Offering. And these are essentially crowdfunding schemes, just like an IPO is initial public offering of a stock. And all of these companies that had various ideas wrote a white paper, built a platform to do crowdfunding, and then publicly launched their offering. These were obviously unlicensed securities offerings, many from different places in the world where they couldn't be prosecuted, or no one even picked up on that for a while.
And that's the thing. People see IPO and ICO, and an IPO usually is something that's been kind of vetted by an exchange, the SEC in America, and
you have to go through certain vetting.
Quite a bit, and then you can invest in something that's going public that might have a lot of growth opportunity, like we saw Uber do recently. Now, an ICO, it's a similar thought of raising money for a venture.
From investors.
Except this one has a blockchain, and it's immediately has some international liquidity, doesn't rely on an exchange, and
it's tradable everywhere.
Everywhere, but there's no regulation involved, or very little.
And it's important to realize that regulation isn't what keeps investors protected. Not really. In fact, in many ways, what regulation has done is it allows investors to outsource the vetting and research they should be doing, right? And it creates a bottleneck, so very few companies can actually do this kind of crowdfunding, which leaves a massive gap in the market where many, many great startups never get to that stage because they don't have a way to get funding. And then at the same time, many, many giant scams and pyramid schemes are listed on the stock markets after being carefully vetted by regulators. And if I name any of them while I'm in London, I'm opening myself to a whole bunch of lawsuits. But we all know them, right? Various companies that do what they call multi-level marketing, right? That are straight up pyramid schemes, but they're listed on the stock exchange. And of course, many funds that have had massive problems and have been Ponzi schemes, they go straight through the regulators. In fact, Bernie Madoff was the head of the regulatory agency, which tells you a lot. We need to think differently about what protects investors. What really protects investors is education. And one of the ways investors get educated is by getting burned a bit, losing a bit of money in poorly thought and risky investments, and then having to learn the hard way and try again and again until they develop a better skepticism and better analytical skills. You can't outsource that to someone else, because if you go looking for information on whether something is reliable and real or not, the people who know how to use social media and use marketing and write fancy white papers are the scammers. They're going to get your eyeballs first. And this is what happened with ICOs. So it's not inherent in the ICO thing itself that they're scams. Not at all. In fact, my prediction has been that in the long run, if we look at this from the perspective of a decade or two, the opportunity to take startups and give them to international investors and bring investors from all around the world to invest in startups, cut out the middleman, accelerate the possibilities, will force education of investors all around the world so that the investors who are less sophisticated become as sophisticated as you see in Western developed economies. Until then, the scammers will exist.
Right. And a large percentage of the ICOs end up being scams?
More than 99% of them.
Wow.
Yes.
Okay.
And some of them are being prosecuted slowly. But this is a game that the regulators are losing because they're operating on a completely different timescale. So, it takes them 3 years to build up an investigation. And these things were launching, 10 a day during the peak. And many of them from jurisdictions all over the world. So, there is no universal jurisdiction for these things, and nor should they be.
Right. Which means also very hard to regulate things in Puerto Rico and Malta.
Impossible.
Impossible, right, okay.
Impossible.
And how did you feel in 2017 when Bitcoin's going up to, what was its high, $30,000?
20-something.
Okay, and Ethereum's up and all these ICOs are happening. I'm sure everyone's asking you what you think. What do you...
Everybody who I hadn't seen since high school was connecting with me and saying, hey, you seem to know about this stuff. Is this a good time to buy? I was like, absolutely not. Do not get in. First of all, this is not a good time to buy. This is a good time to read. Go read something, learn something. And until you feel comfortable to answer that question by yourself, you shouldn't be involved in this. And when you see something going like this, guess what comes on the other side of that? If you see an investment curve like this, it's very quickly followed by an investment curve like this. Nothing goes exponential without going down.
Right.
And Bitcoin's done this 8 times already. It's a common pattern. We've seen it. That's how it grows. And the reason it grows like that is because there isn't much in terms of short pressure to hold it down. So people to speculate on it dropping to keep a lid on the pressure. And there's a limited supply. And all of the cryptos behave more or less in accordance with what Bitcoin's doing. So if you've got something that has limited supply and you suddenly have a speculative mania that blows up, it's going to go like this, which only further fuels the mania until it reaches a point where there simply isn't anybody else who feels just as enthusiastic, and it pauses for a second, and the moment it pauses for a second, the panic just drives it down. This is what happens, and I'm not interested in that part of it.